So 2 months ago, I jumped into a project called Metaversepro, and what a roller coaster ride it has been ever since. In this video, I will update you guys on how much I made, what I could have done better, and what's coming next for this project. As always, none of this is financial advice. I'm just a regular Joe sharing my views, research, and opinions with you guys for entertainment purposes only. Always do your own research when investing in crypto. Now with that being said, let's dive in. Now Metaversepro was a fork of Olympus DAO but on the Binance Smart Chain. It was founded by 1xNW with the help of the Olympus DAO community members. It aimed to be the financial infrastructure for the metaverse, and it was working on a game as well to have more use cases for the Meta token. So as most of you will know, the concept of Metaversepro was to have investors buy bonds of Meta. Basically, they would get the Meta token at a discount price from the actual market price. If the market price was $100, by buying bonds, you could get it, for example, for $90. Those $90 would go to the treasury, and the tokens that you would receive, you could hold them and stake them, and you would get an insane amount of interest over them. Every hour, you would get a little bit of Meta token with a yearly interest rate of about 500,000%. There were a lot of similar projects all hoping to get the same amount of success and hype as Olympus DAO and Wonderland. Now for almost all of these projects, the primary source of income are the bonds. If people don't buy the bonds, the yearly interest rate cannot be sustained. Lowering the interest rate would make people want to sell the token. Selling the token would lead to a lower price of the token, and lower prices means lower discounts on the bonds, and people don't want to buy the bonds anymore. This negative spiral is happening to almost all of the Olympus DAO forks at the moment. Now in almost all of the documentations of these projects, it states that they would do buybacks when the price would go lower than a certain threshold. The backing price per meta in this example. If the price would go lower than a certain X amount, the protocol would start buying these tokens and burn those bought tokens to send the price back upwards and to start a new positive loop. The thing is that when the prices started to go down, the treasury of Metaversepro started to go down with it, and so did the backing price per meta. I've seen it at $85 at a certain point, but at the time of this recording, it is at $5, and the meta price is $24. In their documentation, it states that the principle is to do buybacks at a price of $1, and I think that's the meme as well. Buybacks at $1. Now with these projects, I was always very skeptical in the beginning because of the high inflation rates of the tokens. I was still curious to see where a project would be in like 2 years. So the plan was always to hold Meta for at least 1 year because I would exponentially grow my tokens. In the beginning, the accumulation would be slower, but in month 12 or 13, I could have 1,000 times my tokens, so to speak. As long as the price isn't 1,000 times lower at the time, I would still make a profit. And if they really do buybacks at $1, so the price couldn't dip below, the odds of making a lot of money are still there. Now what I do like about Metaversepro is that they have an active development team, and they're always trying out new things, rather than just being a copy. But this can be their downfall as well. They're developing a game, which is great, but if it's poorly designed, it could really work against them. The same goes for their 6.6 staking pool. Last month, you could wrap your staked meta and stake those wrapped staked metas. Basically, you would get double earnings. You would get a higher value of your wsmeta tokens, but you would also increase the amount of wsmeta tokens. The only thing is you had to lock them up in a vault for 5 days. With an interest rate of an insane amount of zeros, naturally everybody hopped on board. But as soon as that timer of 5 days ran out, everybody with access to their tokens started selling like crazy. There was a Bitcoin crash as well, which didn't help, but basically they're down 96% from their all-time high. So one of the biggest mistakes I made was entering that 5-day lock. I had a feeling a selling frenzy would happen after the time was up. But in hindsight, it's always easier to question your decisions. So for now, I will just continue staking all throughout 2022 and see this experiment through. Now for the future of Metaversepro, there are some major changes. They are migrating to Congruent. This means they are moving to another blockchain, the Ethereum network, under a new name. If you still hold Meta tokens, you can stake them in a new pool starting from the 15th of January to swap your Meta and to receive an airdrop of GAS tokens. That stands for Governance as a Service. In February, they will hold an LBP, or an auction, for 3 days, and they will let the market decide what the price should be of this new token. Just like supply and demand, if there's a lot of people participating in the auction, the price of the gas token will be higher. Once the LBP is over, you should have received your gas token already, and you can start staking in the new 3.3 pool. There is also an NFT auction going on. Every 12 hours, one NFT will be sold, and the bidding starts at 10 ETH. If you hold that NFT, you can receive 75 gas tokens. The first out of 40 auctions is currently going on, and the bid stands at 80 ETH, or about $250,000. So personally, I'm going to skip bidding on this one. The initial gas price will be 1.1 times the average meta price on January the 10th. The final price we will know once the liquidity bootstrapping event has been concluded. Now, the reason they swapped over to the Ethereum network is so that they are, in a nutshell, not as dependent anymore on finding new investors and selling bonds. Especially with DAOs popping up left, right, and center, it's very difficult to get people to bond. They need a stable and reliable source of income for the treasury. On the ETH network, they can use the Olympus DAO model of buying CRV and CVX tokens to get rewards back to the treasury. The higher the treasury income, the higher the APY rewards to the stakers. CVX or Convex is the largest yield aggregator in DeFi land, and platforms like Wonderland have been using different strategies with Convex to grow the treasury balance. Metaversepro will make the switch as well to participate in the so-called curve wars. Now, as for me, I will stick with my experiment of holding meta tokens, or soon gas tokens, for 1 year or longer. This means that I'm in an incredible roller coaster ride in terms of price action. The reason I can stomach it is because I started with a very small investment of only $75. I had bought one meta token at that price, and at one point in time my investment was worth over $800 because of the upward price action and because I had more tokens due to the staking. Currently I hold about 3.8 meta tokens in my wallet that I can't stake for now. With a price of about $25 per meta token, my total value is about $100. Even though I had 400% interest on my tokens in 2 months, which is phenomenal of course, my total value is still the same as at the beginning. So I might as well keep going and keep staking these tokens, and maybe the switch to Congruent can make things more stable. Because it is safe to say that the high inflation rate is killing the DAOs at the moment, and they need a more sustainable source of income to stay healthy and to stay stable in the long term. If they do, I still believe in Hopium and Lamborghinis. Alright guys, this was it for this video. Let me know in the comments what you think of the switch to Congruent. Drop a like, subscribe to the channel, and I will see you all in the next vid. I'm out. Peace.